The Fed's artificial suppression of interest rates is a big reason stocks and cryptocurrencies such as Ethereum and Bitcoin have lost so much value in 2023. If you are looking for a new, exotic, and outrageously cool material to replace wood or metal and make your yacht unique and stunning, you might have found a suitable material. This year, Bitcoin and other cryptocurrencies have fallen even further than stocks, but Goldman Sachs claims that might not happen in 2023. Welcome back to the Ring of Knowledge, your trusted source of practical financial knowledge. What to expect in the crypto market in 2023. It's not just coins that are down. We talk about market capitalization, but how much capital is out there? Had a bull run for crypto in 2023? The recent drop in Bitcoin's price looks like bear market patterns from the past. The bear market in 2018 lasted more than 364 days, while the one in 2014 to 15 lasted about 407 days. The Bitcoin price reached its lowest point 376 days after it reached its highest point. If Bitcoin hit its lowest point in 2023, it will be the longest drawdown. But there are a few things that could change things. The FTX proceedings can put pressure on the government to make stricter rules for the cryptocurrency market. Experts think that this is a good sign for the US spot Bitcoin ETF launches. This will help classify tokens better by the end of the year, which is a likely result. What might change the crypto market? In February 2023, the European Union Parliament still has to vote on the MiCA bill, but the bill's effect will take 12 to 18 months to cover the whole market. The next step in the SEC lawsuit against Grayscale will happen in the first 3 months of 2023. The more prominent place to build BTC exposure will be the tightening macro situation and the similarities between Bitcoin and macro to the last bear market. In 2023, the primary trend will be a low trading activity. The crypto market might seem less exciting than it did 3 years ago. An expert claims that investors will need to be patient and plan for the long term. Bitcoin will rise in 2023, but beware. The cryptocurrency community is split on whether the price of the token will skyrocket or plummet over the next 12 months. The vast majority of market watchers and technical indicators agree that it may find support in the range of 12,000 and 16,000 in the months to come. This is in line with a turbulent macroeconomic climate, fluctuating stock prices, rising inflation, recent data from the Federal Reserve, and the possibility of a recession that might endure until 2024. Some people have a lot of influence, people who are maximalists about Bitcoin, and a variety of other crazy people who claim that its price may surge to 80,000 and beyond. Both camps have proof to back up their claims. One of the problems is that they can have distinct temporal horizons in their minds. There is an ample argument to be made that the value of Bitcoin will almost certainly go down significantly in the coming months, but that it may go up in the middle to late part of 2023. The case for a Bitcoin price increase in 2023. Bitcoin bull runs have always happened at the same time as the 4-year market cycle, which consists of buying, an uptrend, selling, and a downtrend. The gathering part of this process will likely start in 2023, though some people think it could be pushed back to 2024. Still, prices will probably go up around the middle of 2023, and there is evidence to support this idea. Kevin Svensson claims that a bull market could start around April when the 80-week bear market ends. Through halving events, Bitcoin's deflationary nature also encourages these price increases over time. When a halving happens, the pay for miners is cut in the half. The next one will take place in April of 2024. Even when the market is unstable, Bitcoin's deflationary nature causes its price to go up for investors who hold on for the long term. But don't believe the hype. Markets and people in power know that greed sells. Predictions that the price of Ether will go up by a factor of 10 in 2023 should be appropriated with a grain of salt. And despite these claims, it's doubtful that Bitcoin will reach 100,000 or even come close. Pessimistic predictions say that Bitcoin will fall to $3,500. We will witness an increase in 2023, according to other analysts. In the money stocks, Gareth Soloway claimed it may fall to $3,500. Bitcoin will eventually turn as regulatory assurance grows. I think in the near term, we're going to see a little bit of a bounce, then a wave down to 12,000 to 13,000. Then I do worry that you're going to sub 10,000 to 8,000. Maybe even the worst case scenario, 3,500. Tiny percentage, but that would be the equivalent of Amazon.com's collapse in the dot-com period. If Bitcoin falls below 12,000, miners may not be profitable. That would stop transactions, crippling the sector. Let's also recall that cryptocurrency prices haven't correlated with mass exception, which is unhealthy. Crypto prices have been driven by whales and institutions, derivative contracts, and other financial instrument investments. Changes in the times, but a positive outlook. Concerns about BTC price cycles still need to be addressed in other ways. Some people think that, for various reasons, these 4-year cycles might need to be revised. One is that, unlike in previous cycles, most BTC is one of many games in town. It competes with several cryptocurrencies that are better in most ways, as well as decentralized finance, DeFi, GameFi, non-fungible tokens, NFTs, decentralized autonomous organizations, DAOs, Web3 startups, and several much better ways to invest. To participate in Web3 and DeFi, you must buy Ethereum, not Bitcoin. Many people think that Bitcoin will go up because people will be more interested in DeFi. This isn't true, but it's still one of the first coins institutions will buy when they get into cryptocurrency, and its name is a brand. The price of Bitcoin will likely go up around the middle of 2023, but it will go down in the next few months. And end of the world BTC boom? BTC maximalists believe that a crash in existing systems and the US currency will benefit Bitcoin and the decentralized community, which is ironic. A government collapse will require a new financial system, and Bitcoin is ready. There is a perfectly inverted line between the collapse of the fiat infrastructure and a rise in the BTC price, where more instability means higher price gain. The decentralized community will fill the void when the world collapses. Indeed, the oil to US crash would raise energy prices. Due to mining issues, the Bitcoin ecosystem could collapse. Ethereum's September merge eliminated miners and reduced its carbon footprint by 99.99%. A total collapse would render all US dollar valuations meaningless as well. What good are $1 million in Bitcoin if it can't even be used to buy a loaf of bread in the event of hyperinflation? Bitcoin mainly benefits from volatility, but only up to a certain extent. Maximalists in the Bitcoin community should be careful what they wish for, as their wishes could lead to disaster for the USD and the cryptocurrency market. How could the future use of Bitcoin affect the price? Any projection of the price of Bitcoin made over the long run must consider the coin's potential use in the future. Despite the fact that Bitcoin has established itself as a medium for the storage of value, the cryptocurrency still has the ability to develop additional use cases. When combined with the coin's status as a first mover and its enormous credibility, these application cases will most certainly drive price appreciation. Cryptocurrency exchange-traded funds, ETFs, are one of the essential areas that could be instrumental in Bitcoin's development in the future. These exchange-traded funds, known as ETFs, are pooled investment vehicles that hold cryptocurrencies, such as Bitcoin, and they enable investors to obtain rapid exposure to market swing. In addition, because a third party manages the fund, investors do not need to bother researching assets or rebalancing their portfolios. Even though Bitcoin is relatively inexpensive now, once these ETFs become more popular, they should increase demand. Investors eagerly wait for the SEC to approve a spot BTC ETF, which has been turned down several times. Once this ETF is out, it will make investing in Bitcoin much easier for most people, who will help drive up prices. The Bitcoin Lightning Network is another essential thing to think about. This is a layer 2 payment protocol that allows BTC transactions to be settled off-chain. This speeds up transactions. Top tech companies like Square have already adopted the Lightning Network because of its usefulness. Any Bitcoin price prediction must consider the Lightning Network's growth, as this is the next step to the coin's use. As the network grows, BTC will become a more attractive way to make payments globally. This can't be anything but good for the Bitcoin price live. Mark Yusko, hedge fund veteran, predicts Bitcoin will replace gold, reveals massive BTC price target. An experienced manager of hedge funds predicts that Bitcoin will eventually replace gold and that the price of the king cryptocurrency will reach 6 figures. Mark Yusko, a seasoned hedge fund manager at Morgan Creek Digital, predicted in a recent interview with Stansberry Research. Yusko believes that the next global reserve currency will be produced in China, but will be quickly overtaken by Bitcoin. You can only buy and sell using gold. It's either money or credit for everything else. Debts back up money. Every central bank across the world holds gold. Due to their excessive debt levels, several have abandoned the gold standard and adopted the fiat currency system, resulting in a decline in their gold reserves. Where exactly is all that gold going? It's on its way to China, widely expected to replace the US dollar as the world's primary reserve currency within the next decade. Since money is an asset without liability, Bitcoin will ultimately prevail. Bitcoin may replace gold, believes Yusko, because of the convenience of its diversibility and portability. He sets a long-term price target of about 250,000 BTC, based on how much gold is worth. Therefore, Bitcoin is better than gold. If I had a bar of gold and wanted to give each a third of it, I couldn't just bang it on the table and give you each a third. And I couldn't put it into my computer and send it to you. But if I wanted to send you Bitcoin, I'd have to press a few buttons, and then I could split a Bitcoin into 3 pieces and send you each a third. Since it is easier to carry and divide than gold, it will eventually take the place of gold. Gold is worth about 5 trillion, about 250,000 per Bitcoin. It won't all happen tomorrow, but it will happen over time. Ethereum forecast for 2023. Usually, Ethereum goes in the same direction as Bitcoin, or at least that's what happened so far. Some analysts think that after the Ethereum merger in September 2022, a significant network update for the second largest crypto by market capitalization, the pair's prices could soon stop moving together. Kemmerer says that the recently launched proof of stake merge has yet to boost the value of Ethereum. The crypto winter is part of the reason why. Kemmerer thinks cryptocurrency's price could reach 2,500 in the next 6 months. Even though that this is a strong bull case, the same things that affect Bitcoin's price also affect Ethereum. For gains to come back, all areas of the economy must work together. If it doesn't, Ethereum will go down even more. Since the price of Ethereum fell below 1,000 in June, it wouldn't be surprising if it fell below 1,000 again in the next 6 months if more bad things happen. Watch for these other cryptos in 2023. As bad as it was for Bitcoin and Ethereum in 2022, it has been much worse for other speculative altcoins. Even though the bear market is raging, altcoins are probably not where investors want to be, and that won't change anytime soon. During the bull market, it took a lot of effort for many altcoins to prove legitimate. This task has become more challenging now that there is less money in the market. Until Bitcoin and Ethereum get better, altcoins will continue to go down. And just like bear cycles of the past, many will go away completely. Stablecoins are an even more interesting case for 2023. Binance, the largest cryptocurrency exchange, shut down several stablecoins in September, including the 5th most valuable cryptocurrency by market cap, USD Coin. Soon after, USD's creator, Circle, said that in the first half of 2023, they would release a euro-backed stablecoin on Solana. Some experts predict increased competition. Stablecoin initiatives backed by governments or central bank digital currencies are on the rise. The Bank of Japan is looking into a rollout with central banks at the beginning of 2023. Since Turkey has announced it will launch a stablecoin in 2019, several other countries are expected to do the same. One that jumps out is China. While progress on CBDC in China has thus far been confined to specific regions, widespread implementation is expected to occur in 2023. That means competition for stablecoin issuers like Tether, Circle, and Binance. Richard Gardner, CEO of fintech business Modulus Global, says stablecoins are really in a terrible place because there's little question that the emergence of CBDCs is going to chip away at their market. Like Bitcoin price estimates, stablecoin market forecasts are challenging. Ethereum or another coin, risk in crypto remains high. Why did cryptocurrencies crash in 2022? Analysts must untangle a market's many interwoven systems to understand what went wrong. However, 2022 was one of the crypto's industry's most challenging years. Stablecoins were first tested with the Terra Luna fiasco at the start of the year. Additionally, significant enterprises and venture capital firms collapsed in the following months. The Three Arrows Capital hedge fund and wallet provider, Celsius, went bankrupt, locking up customer assets. Recently, the FTX centralized exchange collapsed when it was revealed that it misused customer funds for years and hackers emptied its wallets, leaving thousands of consumers with empty portfolios. These significant events and global economic pressure have shaken the crypto world. Despite that, traders and crypto enthusiasts continue to monitor their investments. During imperfect markets, investors must monitor their portfolios and take precautions. During the crypto crash, automation can help you limit how much you lose. Avoiding losses is vital for your investment plan, especially in weak markets. Trading bots bots and automation software can assist you in setting up price-targeted trades. Automating your trading reduces risk because the crypto market is open 24/7. Automation mechanics like stop-loss limits can help you avoid undue risk. A stop-loss limit lets you create an automatic sale trigger when a portfolio item reaches a value you don't like. Example, 32 Ethereum, acquired at $1,000 each, make up your portfolio. One Ethereum is now worth $1,100, up from the purchase price. You can set up an automatic stop-loss sale for your Ethereum holdings with sites like TradeSanta. You can avoid market monitoring by setting the stop-loss at 1,050 per token. Your portfolio value did not drop, and your Ethereum sale was immediately triggered before the token price could drop further. So that's all for today's video. If you like this video, click the like and the bell buttons. We'll have another video for you soon. Take care until then.